Exchange-traded funds, or ETFs, have become increasingly popular in recent years as a way for investors to gain diversified exposure to a specific market or sector. Unlike traditional mutual funds, which are bought and sold at the end of the trading day at their net asset value, ETFs trade on an exchange like a stock. This means that their price can fluctuate throughout the day based on supply and demand. One of the main advantages of ETFs is their ability to provide diversification. For example, rather than buying individual stocks in a specific sector, an investor can buy an ETF that holds a basket of stocks in that sector. Another advantage is their low cost and ease of trading. ETFs often have lower expense ratios than traditional mutual funds, and they can be bought and sold like a stock. However, there are also some potential downsides to ETFs. They can be more risky than traditional index funds, and investors should be aware of the specific risks associated with the ETF they are considering. Overall, ETFs can be a useful tool for investors looking for diversification and ease of trading, but it's important to do your research and understand the risks involved.